Everyone. Good morning. Just give a minute. Some technical issues this morning. Yep. Okay, let's start the discussion. I have kept the chat box also open. Yeah. Voice not clear. Check now. Clear. Okay. Right. Yep. Okay. Let's start then. So today we're going to discuss the second chapter, and the objective is to complete the second chapter completely. I shared the MQs for the first chapter, and at the end of the session, we'll share with all of you answers to MCQs. So wait a minute, we'll do one thing. I'll share a link for a Google Drive at the end of the session, and all of you just copy that Google Drive. In that drive, I will put the answers to the MCQs and all the material, including the PDF for the highlighted part of the chapters. I put it there. So henceforward, all the data sharing which we will do will be through that Google Drive link, which I will share with all of you at the end of the session. Let's start with the second session. First question, let me put it across to you, is what is the difference between income and wealth? I haven't shared the link yet, Sachi. I will share it at the end of the day. MCQs were shared to those who put the requests to me on email and WhatsApp. So I will instead decide that we'll share it on the Google Drive so that you can download it from there. Okay, let's answer this question: what is income and what is wealth? In case I have to reply to few, it might have happened because there were several hundred requests. So by mistake, I would have. So who will answer? Put it in the chat box. What is the difference between income and wealth? Income is what is earned, income what we earned. What is wealth then? Earnings is wealth. Okay. Wealth, what reputation we earn. Okay. Yes. Income is what we earned in a particular financial year. Wealth is how much we have accumulated as on date. Who is the richest man in this world? Richest man in this world. It's Jeff Bezos. Now, while answering this, what did you consider? Their wealth or their income? Bezos has more wealth or more income? Wealth. Okay. Okay. Oh, inferior goods. Okay. What I'm doing, a lot of requests are coming with respect to the MCQs. Let me put the drive link. I put it in the box. Request all of you to please copy this drive link and you will be able to find the MCQs there. And all the material which we will be sharing with each other will be through that drive only. Okay. Now this is a data which I have gathered from the source IMF, International Monetary Fund, and these are the richest countries in the world. Now you can see there is a value which is represented against each respective country. Yep. Now that is this value. How they have determined that US is the richest country in the world, because the value which is appearing against US is 21.44 trillion. Google Drive, check again. It must be allowed. Link once again. Okay. Once again, it must work. Highlighted material I will put. Don't worry. Now let's start focus on this session. All these things we will give some time in the end. Now, yes, someone rightly mentioned answers will be put in the drive. Wait for some time. Let people answer those on their own, and I will share the answers. Now, there is a concept which we must understand so that we are in a position to understand this topic better. Circular flow of income. As you said, that money changes hands and it keeps on circulating, it keeps on rotating from one person to another. So you can see this pictorial representation. People invest in the factories, workers work in the factory, they produce the goods, they sell those goods, Now, when they sell those goods, they get the money back. But those people who have invested will get their profit, and the people who have worked in the factory will get wages. Those who have invested in the capital, given loan, they will get interest. Entrepreneur will get profit. The landlord will get rent. So there are these four factors of production which we land, labor, capital, entrepreneur. Land, against land we pay rent, to laborers we pay salaries and wages. Against capital, one who is given loan, we give them interest, and the entrepreneurs get profit. When these people get money in their hand, they go to the market and buy the goods which are needed for their consumption. This money again goes for position for consumption or investments. Either the entrepreneur will put the back, either they will invest in the company back, or they will go to the market and buy the goods, or they will dispose of the money or put it in the bank for savings. If they put in the bank for savings, bank is again going to give loan to the entities, to organizations. The money gets again deployed in the production process. From production, again the goods are sold, and again the money goes in the hand of the people. And this circular flow of money keeps on happening. So this cycle, if you have understood, let's understand this also. In every economic exchange, the seller receives exactly the same amount that buyer spends. Yes. Now, goods and services flow in one direction and payments flow in the another. So, just I have tried to create a diagram for simple explanation. This is at one hand and households at the other end. Business produce the goods and they give those goods to the household. This is what happens in the first phase. Production of goods is sold and services are sold to households. What happens against that? The households pay monetary value of monetary value of output, total monetary value, they pay it back to the businesses. Clear? Now, when the businesses get their value against what they sold, what they do, they distribute that flow as wages, rent, interest, and profit, which again goes back to the households. And when household again gets their money in hand, they get this money against what? Against the services they have already provided, which is land, labor, capital, entrepreneur activity. So if we have to understand the circular flow of money, households provide factor services. When the services are provided, businesses produce the goods and services which are sold. which are sold to household again. Against that, households pay the monetary value of those goods to businesses. And the businesses get the money, distribute that again to the households in the form of income. Clear? Now, this concept is clear to all of you? Yes, this is the same chapter as you have discussed in macro. As I shared in the beginning, we study economics at micro level as well as at macro levels. This is a subject of macro level. Now, this concept is clear to all of you, so let's move on to just, we'll come back to this once again. So, it is important for an entity or for a nation to identify national income. And we saw in one of the diagrams above that the list of countries was given and who is the richest country was given. Now, globally, the methods of calculation of national income are same because when we have to compare, has to be at the same, both, all the nations have to be at the same ground. And wherever you go in this world, the calculation methods, yes, right, said circular flow of money, yes, correct. Now let's first understand why do we need to measure national income? Anyone? Why do we need to measure national income? क्यों measure करना है national income? देश की income measure करनी है? Guys, all of you are raising your hands. Some of you are not understanding what exactly that mean. Okay, no need to raise the hands. If there are any questions, put it in the chat box, please. Yes. To calculate, yes, but why do we calculate? Why do we calculate? No country's net worth, right? No nation's wealth. Yes. Yes. To understand, why do we need to measure? Just to understand, are we growing or not? Are we are really growing? Are we going in the right direction or not? So, yes. Then it also helps in planning, in budgeting. How much I have earned will help me to determine how can I spend. So it helps in budget. Yes. It helps in forecasting also. It also helps to look for the changes in the economy, the structural changes. Yes. Yes. Also, depending on how much income the private sector has earned, government will also come to know how much revenue they should get. It helps in also in evaluating. Yes. Okay. Okay. So there are now methods for calculation of national income. What is national income? So remember this national income is interchangeably also the words which are used are national dividend, national output, and national expenditure also. And if you have under the circular flow of money concept, you will also understand how much the national dividend is also the same thing as compared to output and expenditure. These are nothing but different terminologies to define the same word, same concept. In a nutshell, if you have to understand, does total value of goods and services produced annually in a country? So one method is I calculate the total of all the incomes of the people. That's income method. But as we have seen in the circular flow of money, the money just changes the hands. So whatever the service provider and the manufacturers and the resellers sell in the market and they receive the money, that is exactly the same amount of money which they have distributed. So money which was distributed again comes back to the manufacturers, the entrepreneurs. One way is to calculate how much income everyone has earned, which is how much how much rent, how much interest, how much profit has been earned, which is factor income. Either I add everything, calculate, or the money which they have received, they have invested, they have would have spent. So I calculate the expenditure, includes the investments which they have made. Either way, the answer which I'm going to get is one and the same. अगर मैं सबकी इनकम ऐड करूंगा तो भी मुझे सेम आंसर मिलेगा. अगर मैं सब जो भी एक्सपेंडिचर किए हैं लोगों ने, जो भी इन्वेस्टमेंट की है उस टोटल करूंगा तो भी आंसर सेम मिलेगा. एंड ऑल्सो if I am calculate the value of output which produced, which has been sold in the market, there also I will get the same answer. So irrespective of the method, the approach is, but the output which we will get will be one and the same because of the circular flow of money concept. Either we calculate product value, income includes profit, yes, it includes profit, right? Now in product method, let's understand the product method, expenditure method, income method, and then the entire chapter you would have understood, I guarantee. What is product method? It measures the contribution of each producing enterprise in the domestic territories. Let's understand the concepts and then all your queries will get answered. We haven't come to it is methods yet. So let's first discuss the method and then you will understand. Have a little patience, please. Now request all those who are raising hands to please stop doing that. It's not helping. It's creating distractions. Please. In the product method, what do we measure? We measure the value of final goods. Understand what is final goods? Final goods are those goods which will not undergo any further transformation. Yeah. So it involves adding up the value all the final goods and services. What is final goods? Final goods is those goods and services which will not undergo any further transformation. So cotton a final good? No. It will undergo further transformation. Sometimes cotton will also be sold separately as a final good. Yes, yes, yes. So what do we consider? We consider final goods only, their value, and we add them. But while producing a final product, we will not consider the intermediate goods. Intermediate goods are those goods which are used in the process of manufacturing. So if I am producing a piece of cloth, then cotton is an intermediate goods which undergoes a further transformation. Let's understand this based on an example and you will be able to understand. So let's take this example. When I say we calculate only the value which has been added, value of all the final goods, only consider the value addition which has been done, whose production value is added. These are the sectors. Now, problem of double counting, we have to avoid double counting, and hence what we do, we only calculate the net value which has been added. Net value by all sectors. Clear? Now, how do we understand this better? Final goods. If this is the example of a produced a crop and he sold it at a value of 15,000, he added value of 15,000. These goods went for processing. Agricultural crop he produced went for processing. For the processor, 15,000 is the value of intermediate goods. After processing, he sells at 18. So how much value he has added? After that, it goes to the retailer. Retailer, the value of intermediary goods is 18,000 and he sells at 22. So how much is the value he has added? The final out, that is 4,000. Now either I consider only this 22. That's one way. But in that, there is a possibility of I also considering 18. I also considering 15. Because for each level, those are final goods. Instead, what we do, we avoid calculating the sales value. What we consider, we calculate the value addition. Now, if we add this, it comes to 22, which is exactly the same. We ignore the intermediate goods. We only consider the net value addition. And hence, the total is coming to 22,000 when we consider the net value. Clear? Which means at each stage, whatever value has been added, yes, yes. Because entrepreneur or farmer is also taking a risk, and if there is a profit margin involved, that also gets added in the value of goods. Because against risk, that reward, that is also investment which has gone in. It's clear to all of, yes, it will always be, and that's why we avoid double counting. Okay? Adding only the net value additions. Secondly, value addition in a particular year. While calculating national income, the value of goods added in a particular year in question are added up. We only calculate the value which has been, you cannot hear me. Okay, is the voice clear? I think it's clear. There may be issue with the internet at your end. Please check. Yeah. So, in a nutshell, if I have to explain it, what is product method? It is a method where we add the value. Value added is nothing but a difference between the value of goods as they leave one stage of production and the cost of goods as they enter the next stage. It is increase in value that a firm has contributed to a value of a product or service. So that is a value added. Increase in value that a firm has contributed. In the example, at each level, how much is the value the respective party has added is considered. That is value added. And how do you calculate? You calculate it simply by deducting the value of intermediate goods. Why do we use this method in product method, value added method? It is to avoid the problem of double counting. We want to avoid double counting. Clear? Yes. So double counting, if I consider value of each goods at each level, then 15,000 is getting added in 18. If I add these both, it will not give me a right picture. The final value which this product has added to the nation's income is only 22. Each level there has been some contribution. So I don't want to include or do the total in this way that 15 plus 18 plus 22 is the final value. Here I would have considered this also. So double counting will happen. Hence, what we do, we don't consider the sales value with what we consider, we only consider the net value so that the contribution of the earlier stage does not get carry forward. We avoid double counting. Yes, intermediate goods are not included. We only consider the net value. Farmer is earning profit because that's his sales value. We don't know how much cost he has incurred. Loss is possible. Now, how are the steps in this method? We first calculate the production of each stage. Primary sector, secondary sector, tertiary sector. There are three sectors. Primary sector is where the production happens using the natural resources. Agricultural comes there. Secondary sector is known as manufacturing sectors, which transforms one type of commodity into another using men, machine, material. Example, cotton getting converted into fabric, sugar manufactured using sugar cane. Now that is secondary sector. And the third is a tertiary sector, which we also know as services sector, which provide services like banking, insurance, transport, communication, trade and commerce, aids to trade. Two which sectors, primary and secondary sector. So that is first step, classification of enterprises. Second step is calculation of value added at each stage. So we know when we have identified the enterprises, we just calculate their value added, which is very easy to calculate. Value added is value of output minus value of intermediate consumption is the net value added at each enterprise level. And then when we add everything, we get the total value of the goods and services produced in a country. Now, there are two words which we need to understand as a difference. One is domestic, one is national. Because when we say, is GDP the national income? Because GDP is gross domestic product, right? And we are talking about national income. So, is there any difference between these two words, domestic and national? Any difference? Yes, there is a difference in these two words. In words, domestic means which is produced within the nation. If this is India, whatever gets produced here is within the country. But national will also include, for example, there is a company, there are individuals who are residents of India working in a foreign country, and they are also earning income. And income has been earned abroad by the people who are residing in India or citizens of India also belong to the nation. So any income earned by a person who belongs to India should be added. Hence, if we have to go from domestic to national, what do we add? We do add net income earned abroad. What we do? Net income earned abroad. NFIA. Net factor income earned abroad. And how do we calculate? It is the difference between exports and imports, because in the domestic, you have also considered the output of goods and services which some foreigners also have earned in India. So I have to reduce that also because that does not belong to the nation. I'm adding the income which the Indians have earned outside India. I will also have to deduct the income which outsiders have earned while working in India. That does also does not belong to India. What do? We calculate imports and we reduce from there imports. No, yes. Value of goods and services exported, less value of goods and services imported. To know net factor income earned abroad. Now that can be negative also if imports are more. It can be negative. Clear? Now one more difference which we need to understand is we have seen the words used gross domestic product and then we have used the word net domestic product. What is the difference between gross and net? Now let me explain it to you. Depreciation is the right answer. But why depreciation? Why depreciation? Reduction in value. Yes. It's a non-cash expenditure and gross includes everything which has been produced. and the asset will have to be replaced after some time, after the life is over. That is not the uh, becoming a part of the final output. So when we are going from gross to net, we will have to exclude the depreciation, which means if we are going from net to gross, we will have to add it. But if going from gross to net, you will have to deduct the depreciation. Yes. Clear? I hope the concept of depreciation is clear to all of you. All of you know what is depreciation. Yes. If you have understood these differences, then I think we are through with the concepts which are necessary for us to understand. What we have to now focus, what is considered, what is not considered, what has to be excluded, and why. Now, in production method, we also exclude the stock appreciation. Now, what is stock appreciation? Where value has been inflated without any value getting added, right? The value of stock. What you want me to explain, Anisha? Uh, about depreciation. Okay. Now, depreciation is nothing but the yearly appropriation of the amount which you have invested in the asset. If you have invested 10,000 rupees for buying a vehicle you are using, let's say, for 5 years, then each year you are using the value of vehicle up to 2,000 rupees. How did you calculate? You just divide the value which you have spent on the total on the asset divided by the number of years for which you are going to use that asset, right? So 10,000 you invested, but each year your cost is 2,000 rupees. Now, what is this 2,000? That is nothing but a depreciation. Yearly value of the expenditure you have spent on an asset. Simple words. FIA is concept. Okay. If you understand the difference between domestic and national, domestic means whatever is being produced within the country. National is something which belongs to the nation. Now, anything which has been earned outside India but belongs to nation also has to be added. So exports, जो exports हुए हैं country में से, will get added because that belongs to India. Import, import is outsiders have earned from India. That has to be deducted. We are calculating national income, so we also only want that income which belongs to nation. Imports has to be reduced. Why? Because those are the income earned by outsiders from India. Formula of depreciation is simple. Assets divided by value of asset divided by number of years life. Now let's go to the precautions of each method. Stock appreciation. Okay. The market value of goods, let's say the sugar was already in the market, 40 rupees per kg, and suddenly few people started holding the stock, anticipating that prices are going to increase. Demand increases suddenly. The seller now increases the value, inflates the value from 40 to 60 rupees per kg. Now that's appreciation, inflation of the value. There is no increase in output. Production for self-consumption also to be added, because that is also nothing but a consumption. What we have to do, we have to focus on what has been produced. Even though the production has been consumed within the organization for self-consumption, that is also become a part of national income, because what we are trying to calculate, if I would not have consumed within the entity, within the family, I would have sold. Or if I would have sold, if I wouldn't have consumed, I would have went outside and bought for myself. So is actually a production which has happened. Now, some things which we don't consider here is the value of output or goods which our mothers home add. So homemakers add value. They also do a lot of activities, but because there is no commercial value involved, we exclude that from the production method. Yes. Expenditure method is, as I said, circular flow of concept. If we go back to this, national income will be either you calculate the value of all the goods. So when you calculate value of all the goods, this output, that is product method. When you calculate all the incomes, that's in method. And when you invest or spend, that's expenditure method, right? Approach is different, but the output will be same. So in expenditure, what do you consider? Total spending on final goods and services produced within the nation. You add, expenditure will be in the form of either the consumption expenditure, the money which has been spent to buy the goods and services, or it will include investment. So I have put money in the bank, but bank is giving money to, bank has put money in the put money as an investment to the organizations as a loan. So that money is again going back, investment expenditure. The investment is going again in the plant and machinery, stock of inventories, newly constructed house. Now that is also kind of expenditure. Third is government expenditure. Second large component, it includes all government expenditure on products. Government also purchases goods and services and they distribute it. So their expenditure also is getting added. And net exports, net factor income, so, which we have already discussed, exports minus total imports. We want to calculate the national income. We want to calculate income which is belonging to India. If we just add everything, what we will get? We will get the final output, which is going to be a national income. Now, what precautions we have to take here? Second goods are not to be considered, because first time when the expenditure was made, it was already added in the calculation. After it has been added, if those are sold again, that will amount to double counting. Second goods has to be excluded because they have already been considered in the past. Similarly, shares, bonds, old shares do not represent anything which has been sold and bought at the stock market is actually not adding any value. Those are old shares. First time the shares were issued by the company, that was an investment expenditure, investment made by the investors that has already been considered. If same shares are being sold again and again in the market, that will not amount to an expenditure, not be considered. And expenditure on transfer payments. Now, transfer payments are payments which government makes for the social benefit, for offering the social benefits. So, like in today's scenario, government is spending a lot of money to help the poor people. Yes, that's also excluded because government expenditures, government income has already been added. There is no services or goods provided against these payments. Hence, these payments are also excluded. There is productivity happening against these. An expenditure method, what we are trying to do, what we are calculating the expenditure done by the households, the people involved in India. So, consumption, the expenditure which they have done for buying the goods, then the investments which they have done because of the total income. Either I will spend the money or I will invest this money. So, savings is also a part of investment. Expenditure is the expenditure which government has made because production, farmers, government also procures agricultural produce from farmers. So their expenditure also has to be added because we have, yes, we have no problems will come. You will get MCQs only. So concept is very important for all of us to understand. And lastly, the exports because we are focused on national. Anything, yes, I will be able to share it through Google Drive link only. Numericals probability is less, very less. Clear? Now let's go to the income method. As we have seen, there are four factors of production: land, labor, capital, and entrepreneurs. Highlighted parts I will share. So what in income method is done, we just add income earned by all the factors. This rents, interest, profits. Clear? All if we add all this, we'll get the national income. So just focus on this concept, circular flow of money. It's going to be the same, only the approach is changing. In method, we are calculating final value of goods. In income method, we are calculating the income by the households. Expenditure method, we are focusing on the expenditure done by the households. So whichever you use, you're going to recorded classes. Okay, if you have put the money as you're saving in the deposits, it's as good as your investments. But if you have kept the money at home in your locker, then unfortunately that will not get added. So that's the difference between a saving and investment. Ideally, whatever I save, I will invest. somewhere, either in the bank account or in the fixed deposits or mutual fund or SIP. Here, investment has two meanings. One, the investment which the entrepreneur is again making in creation of uh, uh, expansion of activities. Okay. Please restrict the questions to the concepts. All other administrative related queries, I suggest all of you to take this up with your with the institute directly. I won't be able to help you guys. Sakshi, check with ICSI. I really have no idea. Precautions, what has to be taken in income method? Again, the transfer payment to be excluded. Why we are including exclude transfer payments? Anyone, why transfer payments will be excluded from the income method? One-sided. These are unilateral payments. Perfect. Perfect. Yes. Perfect. So in the income approach, what we are doing, it's a method of computing the national income where we just add the incomes earned by all the factors of production, right? So all payments made to the primary factors of production are getting added, which is land, labor, capital, and entrepreneurs. So rent, wages, interest, and profits is getting added. Compensation to employees is one major component. Then operating surplus, including rent, profit, interest, the part of domestic income, national income, and the income earned by self-employed also is getting added. That's also a part of national income. So doctors, advocates, chartered accountants, company secretaries, their income is also getting added. So self-employed or the entrepreneurs or the salary class, every factor of income, whatever the income is getting added, earned will be added. What is also excluded is the illegal money, smuggling, gambling should not be included. There is no productive value getting added there. Windfall prizes, lotteries not to be included because this will a very very uh, what in information about nation's income because these are windfall gains. It will happen in 1 year, not happen in another year, and actually there is no productive value getting added. So those are also excluded to have a clear idea. Mixed income is income from self-employed sector. Receipts from sale of financial assets such as share bonds should not be included in national income as they are not related to generation of income in the current year production. So there is no production happening because of this. This is not against some goods or services. Clear? These are the three methods. If you have understood the methods, I think the concept, if you have understood it clearly, I am sure that this chapter is going to be very easy for you. Now, this point onwards is, if you have understood one concept, then rest all is dependent on that only. So, if we have understood gross domestic product, from that we will be able to find out everything else which can be calculated. All other measures can be added. Shares, first time when we are issued by the company, that's okay. But when it happens in the stock market, those are not considered. So dividend is added as a part of interest against the investment. Yes. Indirect taxes, it is GST is indirect taxes. Okay. Hmm. Okay. Yeah. So first let's understand GDP, and from that GDP we are going to understand rest everything else which we have calculated as a part of national income. And for each method there are three, for each measure we are going to calculate, be it GDP, be it NNP, be it NDP, be it national income. Methods are same. All three methods are same. Now let's understand this, and all your questions will be answered. Don't worry. Wait a minute. When you are calculating GDP, focus on these things. Gross, then domestic. So gross domestic product. So gross means depreciation will be a part of it. Domestic means we are not focusing on net factor in abroad. Clear? From each method, they have given the formula, income, product, which we have already discussed. I'm skipping this part. Now, there are two ways to calculate two measures of GDP. One is at factor cost and another is market value. Now, factor cost includes cost of all the factors of production. And when you calculate at the market value, then you add the indirect taxes also here. So if I have to explain at factor cost will include profitability earned by the entrepreneurs, market price, GDP at market price and GDP at factor cost. The difference is indirect taxes. Indirect taxes are considered. Only remember one thing, factor cost will include only the factor of production's cost, not the income earned by the government. But when you are calculating market price, subsidies, yes, has to be excluded. We can only add net indirect tax. How do we calculate net indirect taxes? If the value of goods is 100 rupees, plus government has applied GST. Now, when you are calculating on at factor cost, you will only consider 100. In this 100, you have already calculated the cost, right? So when you go to buy a product, you are paying including GST. GST was already added. Now, when you consider this value after GST, this is market price. Value includes this value is a factor cost. Clear? So factor cost will not include the indirect taxes. Indirect tax will be added in the market price. I saw a few questions with respect to indirect taxes. So indirect taxes becomes a part of national income because that's also a revenue earned by the government. But when you are calculating the measure of GDP at factor cost, you will not consider GST. Now, out of these taxes, government gives subsidies back to the industry. So if there is a farmer in a or there is a cold storage warehouse, they get subsidy from the government. Now, from where the country will give subsidy, the nation will give subsidiary from the tax revenue only. So if the government is earning 18 and out of this they are giving back 4 rupees, so actually, how much is the net value, net income of the government? So 18 minus 4, which is 14. You will add only 14. That's how you calculate net indirect taxes. Indirect taxes, GST is a indirect tax. Yes, income tax is a direct tax. Wealth tax is a direct tax. GST, custom, excise duty, all these are examples of indirect taxes only. Now, at factor cost, what you are going to do, if you go back to this, if this is the value 22,000, you will add indirect taxes and you will get GDP at market price. This is GDP at factor cost. Clear? Now let me add a page. Now let's understand this. We have calculated GDP at factor cost. We'll have there are three methods. One is product, is expenditure, one is it. How have you calculated the GDP at factor cost from product method? Final value of goods and services. Value added at each stage. So Identify the sectors: primary sector, secondary sector, tertiary sector. Net value added will get GDP. Exclusion will be, yes, so only formula given in the module will come. In expenditure method, you add what expenditures: expenditure on consumption, investment expenditures, government expenditures, and you add X minus M, that is net income from abroad. And you calculate this, you get gross national product. Why national? Because imports have been reduced, exports have been added. In the income method, what you will add: wages, interest, profit, rent, and indirect taxes, net indirect taxes. And you will earn gross domestic product. If you only consider the production of the value of sales in the country, yes, then it will also be GDP. Now, the three ways in which the GDP is calculated. Now, if you are calculated GDP, gross domestic product, at factor cost, when it is at factor cost and I have to go at market price, what has to be added? Factor cost and market price difference is net indirect taxes. Clear? And I will get GDP market price. From direct tax, you cannot calculate indirect tax. There are three methods: product, expenditure, income. All three methods we have discussed. We have calculated GDP. From GDP, we are going to factor cost. We have gone to market price. Now let me know if I have to calculate net domestic product at market price. What is the difference between gross and net? Gross does not, gross includes depreciation, net does not includes depreciation. So what I will do, I will deduct depreciation. Net domestic product at market price, I have to go to net domestic product at factor cost. From domestic product, I have to go to market price to factor cost. How will I go? I will add or less. What is the difference between market factor cost? Net indirect taxes, right? From market price, if I have to go to factor cost, I will have to deduct add, right? Factor cost to market price we are adding. From market price to factor cost, we will have to deduct. This is clear. Now from net domestic fact product, I have to go to now net national product. So from domestic going to national. Difference is domestic and national. Domestic includes only income earned in India, within India, and national includes income earned from abroad also. What we will add? Net income from abroad. Now, this net national product is at market price or at factor cost. Domestic product is at factor cost. At factor cost. Clear? So, if you understood GDP at factor cost, using that you can calculate all other measures. Profit is the profit of entity, dividend is what is distributed to the shareholders. Clear to all of you? Now remember this flow from GDP, how we have went to NNP. If you have understood what needs to be added, what needs to be deleted, I think you are through with this chapter. All this is now, what is GDP deflator? We will understand a minute. When you calculate the GDP, sometimes because of inflation we don't get the right value, right information. The difference between real GDP and nominal GDP is income formula, wages, interest, profit, rent. So, like in the present scenario, when the dollar rate has gone up, the market, the value of rupee is changed substantially. Because of these factors, if I get a value which is not a correct value, right, because of inflation, the value has gone up, the prices have gone up, and if the prices have gone up, if I calculate the national income, if I calculate the national income, I not get the right information because the prices are inflated. So what we do, we take a base year where the inflation rate was not high. We take year's market prices and calculate the GDP once again. We calculate the production value based on the prices which were there in a base year and see what is the real value of goods produced. And then we compare it with the GDP calculated for the current year at current values. And we find out how much is the difference based on because of the inflation rate. Now, when we do this exercise, this is called as finding out the GDP deflator. Nominal and real GDP. When GDP is measured on the basis of current price, it is called as nominal GDP, GDP at current prices. When GDP is calculated on the basis of fixed prices in some year, where the inflation was not high, it is called GDP at constant prices. See, the word used is constant. There was no much change. We calculate the real GDP. Right? Now, using this real GDP, we compare nominal GDP. So, nominal GDP and real GDP, and we calculate how much is the percentage of change in nominal GDP and real GDP, and that information which we receive is called as GDP deflator. So how do we calculate? If let's say GDP at current prices has come 125 and real GDP was 100, then you find out the difference. You calculate the percentage of change, and you will be able to find out the real the GDP deflator. How much is the GDP changed because of change in the prices? There is no value addition as such has happened. The prices have increased because of some factors, inflation, and in therefore we must also know how much is the real GDP of the nation, how much is the actual growth. It may increase as a result of fall in prices, but actually it may be less as compared to last year. And GDP does not show the real state of economy. So if the value has changed because of change in prices, change in inflation rate, then they are not getting the real GDP as such. And why we are calculating the national income is to understand how much the nation has grown. And for that purpose, we have to understand that if the value which I'm getting out of the calculation is because of the inflation in prices, then it is not giving me a true picture. When it is not giving me a true picture, I must find out what is the true picture. So I take 1 year as a base year where the prices were constant, there was no change in prices because of the other factors. And I compare the GDP which I have calculated to the GDP calculated on the basis of prices of that base year. Now, when GDP is calculated at the prices of the base year, we will call this as real GDP. That's actually real. And when we calculate at the current price level, it is called nominal GDP. And when we calculate the change, percentage of change, that information is called as GDP deflator. Clear? So remember the formula, it is nominal real, not real nominal. Clear? So GNP we have considered, embedded method, factor cost, NNP we have considered. Right. So what is the national income finally? NNP at factor cost. We have seen all these calculations already. I request all of you to go through the material and understand the concepts. Right? Discuss this already. Numericals, no. Very less probability. Now, we are going to do from Domestic income, we will cover the remaining parts tomorrow and then start the for next session. Next tomorrow means the session. You will get the information through institute. I have shared a link. I'm posting it again. Copy this link. In this drive, I will also put the answers to the MCQ. I will also share PDF, highlighted PDF of this in the same drive. Plus, there is a small presentation I have created on national income chapter. That also I will put it, and I will also put the MCQs of this chapter in that drive. So keep this link handy with you. Yes, link will be provided to you through emails. You can use calculators. I have again posted it. Yes, so clear. So thank you. It's time. I think it's time for you to join for another session. Thank you. God bless you.